Let's quickly have a conversation about FICO 10 and FICO 10T. How do you actually make your credit shine through these new models? Don't go anywhere. You're going to love today's conversation, I guarantee it. Welcome back, folks, to another edition of the Awesome Sudi Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about FICO 10 and 10T. The whole thing is everybody's sort of hang up on FICO 9, but no, this is outdated. In the last 12 months to 24 months, FICO has introduced new scoring models, two scoring models. So you have the FICO 10 and FICO 10T, and you can see on the screen that they haven't changed the composition of the FICO, but they have been given more weight to certain items. So we still have a 30% that goes to the amount of debt that you have, 35% your payment history, 15% to the length of credit history, 10% for new credit, and 10% for the credit mix. Now, FICO's newest credit scores, the FICO 10 and 10T, they actually are adding a little bit of change here. So for the vast majority of people, however, any change to scores from the new scoring models is likely to amount to less than 20%. So the change here is pretty minimal. However, FICO 10 and FICO 10T are designed to outperform all previous versions of FICO scores in helping lenders evaluate credit risk. So you have several factors that lenders started paying attention to. For example, your tenant, or if you are a tenant, your tenant data. What is your payment history in terms of paying rent, right? What is your education level? What is your employment history? What is your stability in terms of moving in and out from our neighborhood? So what we call geographical stability. So those things are important when it comes to the FICO 10 and 10T. Before, in the FICO 9 model, those things were not taken into account, but now they are really taken into account. And so these changes are meant to give lenders more insight into how someone handles their finances. So FICO 10 and 10T scores can be used by lenders to evaluate credit risk when a person applies for credit cards, car loans, personal loans, and mortgages. Okay, this is something you need to pay attention to. So you gotta be financially disciplined, not just when it comes to paying your loan or a credit card, but also when handling all aspects of your financial history. For example, the way you pay your utilities companies, you got to be very careful about that too. What are the differences? Let's just dig a little deeper here. So how FICO 10 and FICO 10T are different. So FICO updates its scoring models about every 5 years, okay? Every 5 years, every 5 to 7 years, and algorithms are analyzed and updated to better predict risk. What they care about is default risk. What they care about is credit risk, okay? So this is the first time the company has offered two versions of a general FICO score. So the score that got consumer attention is the FICO 10T. So the T stands for trended data, okay? Are you following? So if you think of a traditional FICO as a snapshot, the 10T would be more like a short video. So you have, this is like, when you go to Google Trends, you have what's hot today, what's not today, that's kind of stuff, okay? So FICO competitor Vantage Score likewise introduced a score using trended data version 4.0 in 2017. So FICO 10 is being offered with and without trended data because that's what lenders wanted. Okay, so the FICO 10 uses the same reason codes as previous versions and can be easily adapted because it is backward compatible. Okay, and the FICO 10T is more predictive, so it's more prospective, whereas the FICO 10 is more retroactive. The FICO 10 is more predictive, but it requires some new reason codes, and so it will take more time and money to adopt. Okay, but the whole one thing I want to specify here is that FICO 10 and FICO 10T will not replace earlier versions of the FICO credit score, and lenders can continue to use those older models if they wanted to. Okay, so many lenders will still rely on the FICO 8 credit scoring model, for instance, for credit approvals with products such as credit cards and personal loans. And for mortgage loans, lenders may use different versions such as FICO 2, FICO 4, and FICO 5 based on our analysis. Car loan issuers can use the same options, FICO 2, FICO 4, FICO 5, or FICO 8. It really depends on the situation. So credit card, credit card, credit card. Credit cards are not the only products that lenders will use the FICO for, okay? So you need to make sure that whether you are thinking about credit cards or personal loans, please remain financially responsible. FICO 10 scores are now available for use by the 3 major credit bureaus, okay? One thing we know for sure is that most lenders still use the FICO 8, which was introduced about 10 years ago, but bottom line is FICO 10 and 10T are now available. Your financial institution might use it to evaluate your application. Let's talk about the score impact. How might FICO 10 affect your score? Folks, I just want to remind you so that when we talk about FICO and FICO 10, the T stands for trended, okay? Now, how might FICO 10 affect your score? Your score is most likely to drop when using the FICO 10 scoring models if, let's say, you took out a personal loan to consolidate credit card bills, but now your card balances are up again, or it appears you have applied for additional credit. Going back to what I said earlier about your new credit, okay? If you're using credit card to get by, or you just cannot seem to whittle the balances down, or your balances are growing. So here we pay attention to what? Credit utilization. So your CUR is kind of high. Your credit utilization ratio is kind of high. So your score will actually go high. If your CUR is high, if your CUR is high, your credit score will go down. Okay, there is an inverse relationship here. And if you have missed payments, the penalty for going 30 days past due will even be harsher than it is on the previous FICO scoring model. So your credit score will go down. On the other hand, some people could see their scores rise by 20 points, 25 points or more. So your score is most likely to rise if you have been penalized but for occasional higher balances. Okay, so this is something that you need to think about. So big decision time here. I want you to talk to me. Are you taking the steps needed to improve your credit score no matter what scoring models you're using? Whether we're talking about FICO 2, FICO 4, FICO 5, FICO 8, FICO 10, FICO 10T. What are you doing right now? What are you doing to keep your score high? Talk to me about that. So if you want to have a higher score on the FICO 10 and FICO 10T, please continue to pay down balances on credit cards. Consistently high statement balances or rising balances can suggest financial difficulty, right? We're talking here about a high CUR again. Okay, so if you're paying off your bills monthly but have high statement balances, make frequent payments throughout the month. Don't wait for at the end of the month. You can make 3-4 payments in the month. So that keeps your balance low no matter when it's reported to the credit bureaus. This is kind of cool. You want to do all you can to avoid missing a payment. And if you don't already have an emergency fund, start one. This is important. If you have to turn to credit cards in an emergency, your rising balances could hurt your scores. Obviously, we're speaking here about FICO 10 and FICO 10T. If you're thinking about consolidating credit card debt with a personal loan, avoid charging up the credit card balances again, because FICO 10T will penalize you for it, because FICO 10T is the trending part of the FICO 10. Let's talk about score boost. Okay, how do you look good no matter what score lenders use? This should be the ultimate question you need to ask. Okay, one thing I want to say here is that all lenders want to find creditworthy applicants. This is a no-brainer, right? They just want to minimize the risk that they will approve customers who will not pay as agreed. And this is the default risk, credit risk. Okay, so the ways to build credit have not changed. whether we're speaking about, I think I just told you, whether we're speaking about FICO 2, 4, 5, 6, I really don't care. FICO 10, 10T, doesn't matter. Pay every bill on time. Be financially responsible. Keep credit card balances low relative to your credit limits. Again, the CUR. Okay, be very careful about applying for new credit, because new credit accounts for 10% on your credit score. So if you have a deluge of new applications, this can suggest that you are having financial distress. That's what it is. You are struggling right now. That's what it is. And keep all credit card accounts open unless you have a compelling reason to close them, such as if you have a high annual fee, for instance, you can close them. There are credit limits. Those old credit card accounts have limits that can help your credit utilization, and older cards also contribute to credit age, which is a minor factor in your score, right? 10%, I'll take it. So it's really important, okay? So money, folks. When you talk about FICO, I want to break it down for you and let you know whether we're speaking about FICO 10, FICO 10T, we are speaking about money. At the end of the day, your ability to get a loan, to get the credit card that you need at affordable rates has to hinge on your FICO score, okay? And at the end of the day, remember the 5 elements I told you about. FICO scores, whether they're 2, 4, 5, 8, 10, and 10T, they still have the 5 main components. Payment history, 35%. Your credit utilization, 30%. Your credit age, 15%. Your credit mix, 10%. And new credit, 10%. You can see that payment history carries the most weight. So paying your bills on time each month can help you establish a positive credit history and potentially improve your credit scores. And if you take payment history and credit utilization, those two altogether account for 65%, which is like nearly 2/3 of your credit score. So this is how important those are, okay? They are important for your FICO 10 and FICO 10T scores. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation about FICO 10 and FICO 10T. And let's talk about score check. So you're sitting there, you're just wondering, what is my FICO 10 score? What is my FICO 10T score? Well, there are a lot of ways you can find out. I mean, FICO has made no announcement so far about when or whether individual consumers will have access to their FICO 10 and FICO 10T scores. For now, you can check your FICO 8 and FICO 9 credit scores by purchasing them directly through FICO, or you are able to get either of those scores free of charge. You have a platform called annualcreditreport.com. So once a year, Congress has mandated that you have access to your credit report, and you have all the reports from Experian, TransUnion, and Equifax for free. You're not paying anything, okay? This is important. And many banks and credit card companies offer free FICO score to their customers, okay? I mean, free FICO score access to their customers. We know we have covered on this show Capital One, CreditWise. You have Amex, American Express. You have Discover. You have Bank of America, you have Chase. So you're able to actually access, either you access your FICO or your Vantage score. It's pretty similar, okay? There are minor differences, but at the end of the day, a FICO credit score is a credit score. This is important, okay? And one thing I want to say here is that, please, if you don't have access to, or you want to have continuous, I would say continuous access to your credit score for free, you have services out there that would allow you to have that. We have covered on this show Nerd Wallet, Wallet Hub. We also have covered Credit Karma. Okay, so those are players that they will basically give you access to your FICO score for free, or your Vantage score for free. The only thing is they will actually use your data to serve you ads. So at the end of the day, it doesn't really matter. If you want to have a free data, you're gonna have to give them something. Okay, but we think it's just worth it. Nobody is forcing you to apply for a loan. They will serve you the ads. You can just dismiss it. Okay, nobody is forcing you to apply for a credit card, but having access to the data is really important. Okay, big decision time. Big decision time. I want you to talk to me right now. Do you have access to your credit score right now? I'm not asking you about FICO 10 and FICO 10T. I'm asking you about FICO 8, FICO 9, Vantage score. Do you have access to it? Talk to me. If you do, I want you to go right now and look at it and see if everything on your credit report is accurate. If there is not, please, you want to start filing disputes. Very important. Speaking of filing disputes, let's talk about score improvements. Okay, folks, how do you improve your credit score across all models? Here we're not speaking about FICO or Vantage score. We're just speaking in general here. Okay, one thing that's very important is that people tend to be intimidated by the glut of different credit scoring models. You know, you hear the Vantage score 3.0, FICO 8, FICO 9. Vantage score 5.0, whatever. These things can be very intimidating. But at the end of the day, if you want to improve your scores, you just have to do a few things. No matter what scoring models that you're looking at, your score will improve, okay? Credit card, loans. The bottom line is that this will have an impact on your financial life, your ability to borrow at reasonable APRs. This is important. And not this, the funny thing is, we're not talking about only your ability to borrow, because if you have a high credit score, this could also help you get cheaper insurance products, okay? I mean, more affordable, I guess. You can actually get, because some landlords will check your credit. So it's important to have perfect credit also in your ability to have a house, to have an apartment. Okay, so one thing you want to do is you just want to follow a few things to improve your score consistently. First, you want to check your credit and fix any errors. I just spoke about it. This is important. You want to review your credit report carefully for errors. You never know. There might be some identity theft, some unauthorized transactions, or you left your old neighborhoods. There's just a lot of stuff that could be wrong on your credit report. So go through it. You want to really look to it and see if there is a problem. If there is, you need to think about whether you should hire a credit repair company to fix it or fix it yourself. Obviously, you want to pay every bill on time. We've talked about that. You want to pay down your credit card and unsecured debt balances. We've talked about that because the new FICO Score 10 models particularly penalize credit card balances and reward consumers who pay off their cards each month. This is really what it is, okay? So you want to commit to paying off every single credit card balance in full as soon as humanly possible. You want to think about, if you have the resources, you can enroll in Experian Boost. This can help you also. You can try weekly payments to keep your credit utilization ratio low, your CUR low. It's important. Keep old credit cards open and open secured accounts if you need to build more credit. Thank you so much for your attention, folks. I was talking to you today about the FICO 10 and FICO 10T scoring models, how to make your credit shine with these scoring models. So we defined the credit scoring models. I gave you the differences, the score impact, the score boost, the score check, and the score improvement. Thank you so much for your attention. I will speak to you another time, but until then, remember, stay marvelous.